What's going on, Moon Gang? How's it going, Ape Nation? Welcome back to another Dumb Money update for today, Tuesday, August 31st. Now, this particular update video will be all about AMC. It is looking phenomenal, magnificent, amazing. Whatever you want to call it, it is looking very, very, very good. In this particular video, I'll be diving into some of the short interest data points. I'll be diving into some technicals, and we'll also be taking a look at the option chain for AMC. But if you don't feel like watching the entire thing, all you need to know right now, and my non-financial advice opinion, is AMC is looking bueno. So with all that being said, let's hop right into it. Alrighty, before we hop into the technicals, let's take a look at the Ortex numbers. So for today, there was 700,000 shares borrowed against AMC with a net return of almost 3 million. That puts the short interest at 16.81%. The utilization is at 93%, and taking into account the borrow change, that means that the shares on loan probably in the realm of 105 million after today's action. I also want to point out some of the trends. Just a quick reminder, ever since the June timeframe until now, the estimated short interest, the yellow line here, up, up, up. The shares on loan also up, up, up. I was getting this question a bit today, so let's show you these. The light green line, the average age of shares on loan has gone from 31 days as of June 24th all the way up to now around 55 days. And even the number of loans giving out per day has gone from 715, and right now we're cruising at 1,100. And the final one that people have been asking me to see the trend is the cost to borrow average of the new ones. Not really trending, pretty much sideways. Its average today was 2% with a max of 5.47%. All of these numbers are above average stocks, normal stocks in the stock market, but we're not seeing a crazy trend there yet. I do think we'll see more of a trend as the utilization gets closer and closer to 99, 100%. Somewhere in that realm is generally where you see these gigantic spikes in the cost to borrow. Remember, CTB, cost to borrow, solely computed by saying supply and demand. How many shares can brokers lend out, and how many people are trying to actively loan those shares out, take them out on loan, borrow them, exclusively supply and demand of the pool of shares that people are willing to lend out. So that's your quick Ortex update there. Quick look at the intraday 5-minute chart of AMC, pretty much in upward channel all day. To start today off, we exploded up to 46. Right here during the live stream, we were calling out how we thought some dip buyers, day traders were going to step in here in the mid 45s. At first, they looked awesome. Then they were probably sweating. And then by the end of the day, they were looking A-okay. More important for the technicals, I want to point out what's going on the daily chart. I've been talking about this quite a bit, but really what I want to show you, maybe just a little bit more graphically, is ever since July 21st to August 25th, we have a massive view. And then right there, from that point, we're now swinging back around. This is a classic cup and handle. If you Google this, look this up in any technical analysis book, it will tell you it's a bullish pattern. And that's just because think of what it means. You run into a price level where the demand does not outweigh the supply and you get smacked. And then you build back up to it and it happens again. But on that time, same amount of demand got you to that level, but you are soaking up the supply. The same people who sell, you don't have an infinite amount of sellers. Obviously, you're soaking up supply. And then this is where the psychology of why this technical pattern works gets interesting. When it gets smacked down, the fact that you have a higher low previous to the big U tells you that the bulls, the apes, they're getting more aggressive and they're buying earlier. And then on your third test of it, well, with more aggression in the demand and supply, that's why it tilts the odds in the favor of a breakout, because you're continually soaking up the supply, as in the supply is going less, but the demand is getting greater, and it might be enough for a breakout. So this in no way guarantees anything. I think the best metaphor would be something along the lines of if you're playing poker and you're dealt pocket aces, very, very good. The odds are in your favor, but it doesn't guarantee you win. And for me, I kind of think of the stock market in the same way of you're always looking for optimal risk to reward bets, and it doesn't guarantee anything, but you're looking to capitalize them when the edge is in your favor. And right now on this time frame, I would strongly argue that the edge is in the favor of the bulls and apes supporting AMC. So my game plan for tomorrow and the remainder of the week is checking out the breakout of 48.30. From there, I'm watching the key psychological level of 50. And then past that, we do have previous support, which I believe will now act as resistance at 53. And north of that, I think we're legitimately talking about the 60s. Now, just to give you both sides of it, just so you know, I do believe there's support around 43, the low from August 25th. And then past that, we have support at 40. To see the same scenario on the 4-hour chart, just a little bit more detailed, we do have, here's that exact same cup and handle. And if you zoom in, you're just seeing that strength. You're seeing the continuation of higher lows, and it's still getting knocked at the same level. But like I said, there is not such thing as infinite supply. So we're looking for the breakthrough there. And as I showed you in all the Ortex data, this means that more and more people are like, all these trends in the Ortex data tells us that the money flowing in betting against AMC is getting more and more sizable. So as they continue to be wrong, that raises the proverbial ceiling of where we could go, because there's more people trapped in the wrong trade when this thing really starts to squeeze. So that's your quick Ortex update. That's your quick technical. And finally, let me just show you what is going on in the world of options and what I'll personally be watching. So this Friday, September 3rd, remember, each contract represents 100 shares. And the reason we talk about this is you've probably heard of the term gamma squeeze. And basically it just means the people who are selling premium, if they're wrong and they sold something that was out of the money and then it goes in the money and they have to hedge it, it basically just relates to people selling premium who now, to hedge their position, have to buy shares. That's the quick way to put it in layman's terms. So today, nice action. 1.3 million shares represented at 45. If we get up to 50, that would be a potential hedge of 2.1 million shares. And if we really get going, we have another 1.2 million at 60. Excuse me. That is 1.2 million potential shares have to be hedged at $60. And that's all for this Friday. Don't forget that next week is a shortened week because Monday is a US holiday, so the market's only going to be open for 4 days. But I'm really focusing on the September monthlies where we see far greater open interest. So right about here, you're going to see some crazy numbers. At the 40, 3.5 million. You have almost 2 million at the 45s, 1.7 million at the 50s. You have 800,000 at the 55s. 2.3 million at the 60s, 1.2 million at the 70s. The list just goes on and on. 2 million at the 100s. Like, these numbers are huge. 7.4 million at the 145s. As all of these out of the money call options continue to trend in the money, the people who are selling this premium are going to get scared, and to hedge themselves, they're either going to dump it or they're going to buy shares. So that's another form of buying. So short squeeze, that's all the data trend stuff. When I was talking about Ortex, it goes up, they're going to get scared and just cover their position. To cover a short position, you buy stock. In terms of a gamma squeeze, that's all about the people selling premium, buying shares because they just sold something that they never thought was going to go in the money. And then finally, with both of these two, as we see the explosion higher and higher, well, of course you're going to have people who are excited. AMC, that it's by no means a mystery to the news right now. A lot of people know exactly what's going on with it. And maybe these people who are on the fence are like, maybe this isn't worth what's going on. As they see these tendies raining from the ceiling, I think you're going to see a lot of people get excited and kind of hop onto the train. So between those three, I very much think that this particular pattern is going to play out. And we've seen this play out before, March to May of this year. And then we saw the explosion in early June. I'm not saying it's going to be the exact same of it, but I think it's going to have a lot of similarities. So once again, I'm insanely bullish right now of what's going on with AMC. I do not see the current bearish case. It is just looking very strong. So with all that being said, I would love to get your thoughts on AMC in a comment below. Maybe you're seeing something I'm not seeing, or maybe you want to correct me on something. Would love to have a discussion with you. Let me know in the comment below. And until I catch you next time, from me and Cher, best of luck in the markets.